Hey guys, welcome to another edition of the Trade Genius Podcast. Philip here with Bob Kula as always. And Bob, today we're going to talk about the Fed. Things are changing with the Fed in a way that we might not have seen for maybe even going back to the days of Andrew Jackson when he killed the central banks, right? So what's going on here that the dynamic is changing?
Yeah, so things are getting real, and we're at the end of fiat, and so basically the thieves are turning on each other, and so you have a situation where the central banks around the world had created this notion that they are independent and they can operate independently of the politicians. And the banks have amassed a lot of power over the last, I would say, 150 years.
Sure.
But lately, they've gotten to a point where the politicians now are out of sync with the banks. And the banks are getting too powerful. And, we've always talked to Trade Genius, at some point, the politicians are going to take back control over the creation and the spending of money. And you started slowly seeing it. Basically Turkey did it. They basically just subsumed the central bank. They fired him. And took over. Any autocratic government has basically just their central bank under their thumb. I guarantee the central bank of China does not operate independently of what Premier Xi Jinping desires for that country. And you're starting to see now signs in the West where you're saying, hey, what they're doing at the Fed is running at cross purposes to my ability to remain in power. And I think with this midterm election coming up, it's going to be stunning. I mean, if you're a politician, Biden was an idiot to go along with Jerome Powell, because Jerome Powell basically is going to push him out of power. Not that Biden probably wouldn't have lost with all the other woke issues, but that issue didn't help. And then so the first chart here we're looking at is the complaining now that's starting to show up. Now you remember the banking system to me represents really the globalist movement, right? They want to have borderless power, and they want to use the power of money and the central bank digital currency run by the BIS out of Switzerland to control us ignoramuses, hoi polloi in the nation states. And, they got to get through the politicians first. And so now you're seeing this rise, what I call the rise of the right, around the world. That should be probably a podcast we should do. But with that, it's populist right. And it's not the Rockefeller right. And, the Rockefeller right loved the central banks because it was in a way in which they can enrich themselves. The populist right hates the banks. And so this one here is, the premier that's going to, or the premier wannabe that wants to challenge Trudeau is starting to snipe at the Central Bank of Canada. And here's one of those articles saying, hey, this doesn't mix. Well, guess what? They're going to get steamrolled over time. And it's not just Canada, Phil. The next chart is going to show you that in Europe, you're having the same kind of question being up. I think this is Finland. I can't really read the article from our conversation there, but the same thing. They're like, hey, you can't blindly just enact policies that are going to destroy the Western governments around the world to satisfy your credibility issues. You need to become in sync with the politics. And so you're getting this issue here now where they basically ran ahead of the politicians. And also, they're not doing a really good job. They're trying to solve a problem they can't solve on top of it all. So they're putting the politicians in impossible positions here where they have to explain and support a policy that's inherently not going to work. And they're like, oh, by the way, I can lose my job over this and you can't. Well, we're going to change the rules of the game, or we're going to start getting involved in your world. And the first thing they're going to do is this thing, next fit chart we're going to show is what Janet Yellen's going to do. And she won't be the last. And it's really interesting because this wasn't my idea. I guess there's a guy, George Gammon, out there that coined the phrase. I loved it. Instead of we're going to have a central bank, we're going to have a treasury bank, which makes sense. Basically, we're going to get down to where the treasury is going to assume more and more power over what the Fed is going to do. And remember, the Fed came into existence via legislation. The Fed could be modified through legislation too, especially if things start hitting the fan. There's going to be heads are going to roll. The politicians are going to point it right to the Fed. But Janet Yellen is going to use money that she has at the Treasury and her ability to have bond auctions. Remember, the prime bankers and prime brokers they're required by law to buy any of the bonds that a private entity doesn't buy during an auction. So Janet Yellen can spin up auctions all she wants and put them out there, and she can use that cash that's into the Treasury to buy back higher cost bonds that are out on the curve. And that's basically Operation Twist. And so she's running an independent agency than the Fed. Remember, the Fed can only really control short-term rates, okay? Or the Fed can buy bonds from the banks and give them cash. Well, she's just cutting out the middleman, and she's going to use the Treasury cash and buy back the bonds herself. So, people are getting to the point like, number one is, why do we need banks if they're not going to lend because it's all in RPOs, right? Or reverse repos? Or why do we need a central bank when the Treasury could just do an auction and create their own money and then monetize it? So I think we're going to see over the next couple of years is a reimagining of what a central bank is and what it does. And I think the war is going to be in terms of what the liberal progressives think that what that should look like versus what the right progressive movement wants to, or populist movement wants it to look like. And that's really where the war is going to be. But the central banks around the world are going to suffer from it. And, as you know, Phil, we have the younger generation coming up. Mine's into the workforce. Yours is sliding towards it. Is that there's no trust in these institutions at all. They don't understand the value at all. And the question that we always hear is that why am I getting taxed if the government can just wink money into existence? Why does this entity that nobody votes for gets to determine how much I pay for a mortgage? So it's going to be really interesting. There are going to be some very hard conversations as the next generation of politicians come into being. And those are going to be starting here in the U.S. in 2022 and in Europe going forward as well. As you know, that Sweden went right. You had the Dutch kick out their left-wing politician. In the United Kingdom is fraying at the seams, although they're going to try to, looks like, resurrect a Goldman Sachs globalist, which will probably fail. Hungary is right. Poland is right. And I think you're going to start seeing, hey, we got to get this globalist, non-accountable entity under our thumb. And so what really the question you have to ask yourself, right, is, well, who cares about how do I make money off of that? And that's really the question that we should ask ourselves. Yeah,
and just kind of touching on the whole Fed thing. I mean, we've always had like a Treasury. We haven't always had a Fed, right? Because after Jackson, we didn't have one up until 13 or 14 when they passed the Federal Reserve Act during the holidays, right? And most of the policymakers were away. And then, boom, we're back into that. And we've discussed that before. It's like, well, if they can't do their job, which at this point, I think they've made a pretty good case for it, right? Then, yeah, why doesn't it just go back to the Treasury? What are they good for? Because they have a huge payroll. It's kind of a big bureaucracy that ultimately gets paid for by the taxpayer, right? I mean, there's, in a way, it eventually gets back to that because bonds have to be repaid and they're buying bonds and then making money off of all that. So just to simplify it, right? It's not like they're out there making money off of any type of productive work that they're doing. It's just skimming, basically, right? I mean, most of the profits of that go back to the Treasury, but them as an entity having a payroll of that size with thousands of PhDs doesn't seem so desirable when all they can do is give us hyperinflation. So
yeah, and what's funny is that people thought Greenspan was trying to kneecap the Fed because he's a Republican, and Jerome Powell, as Republicans, trying to kneecap the Fed by making the policy so onerous. And so people start questioning, wait a minute, why are the banks getting $70 to $80 billion of free money to not lend?
Exactly.
Who in Europe was getting loans at 0% interest, right, while people are losing their home? Those questions are going to start getting asked more and more. Mm-hmm. And it's over when the audit the Fed thing actually gets approved. So then once we know the end is nigh, but we know even before then there's going to ways for us to make money, Phil. You and I were talking, really what Janet Yellen's doing is really basically a Treasury-driven Operation Twist, right?
And
And so
for those that don't know what that is, can you explain what that is?
yeah, basically they're going to buy bonds that are newer and of lower cost and lower duration, and they're going to buy the more expensive bonds and retire them. Basically, they're going to take right now because interest rates have skyrocketed so much, the bonds are trading at a discount. So Janet Yellen's going to get her shopping bag out, and she's going to retire these bonds that are now trading at less than par.
Okay.
And what that's going to do is going to drive the long end of the curve down, and it's going to basically another form of yield curve control because there's going to be a lot of pressure in the real estate markets and lobbyists about you're killing our real estate market completely.
Right.
You know, it's one thing to get balance and everything to do have go from 2% mortgages to 8% mortgages in a year. You know, you're going to destroy the country. So it's a way in which they're going to try to rebalance with the politicians in charge instead of the Fed being in charge. So they won't call it Operation Twist. They'll call it some sort of managed readjustment, you know, some crazy term. But that's essentially what it is. They're gonna buy back expensive bonds that are now trading less than par by using basically it's like paying one credit card off with the other. I got a 0% loan, right?
Right.
And I'm paying off the 18% credit card.
That's a great way of looking at it.
Yeah, that's the best way to do it. And so, but the Treasury's leading this, not the Fed.
Okay. So, so that goes back to basically we're getting sucked into this inevitable thing of yield curve control, which is basically what we've seen Japan do, right? And then what that does to the currency. I mean, the yen is just breaking right now, and they're throwing the kitchen sink at it, trying to keep it afloat. And of course, if the dollar, the reserve currency of the world, does that, then assets, you want hard assets, right, Bob? Because that's just going to force, because of the extra printing involved in yield curve control, to keep those bonds propped up. Then you want to own things like gold and Bitcoin and other hard assets, because those are really you're not going to stop that yield curve control, as Japan has shown us. And these assets are really going to benefit from that. And is that just it, or is there other things, or should we just focus on that as investors, because that's where this is all headed?
Yeah, I mean, you know, if you think about it, is there's going to be more dollars in circulation, but it's going to cost less to have the dollars, if you will, because you're paying less carry for it. Does that make sense? So, you know, if I had $100,000 out there at 10%, right, but now I have $300,000 at 1%, I have more dollars floating around there, so I basically am monetizing the debt, but my carry's lower because my interest rate's lower. And when that happens, it changes the nature of real rates versus gold and silver and Bitcoin, and those are the counterparty risk assets, and they're gonna move up because of that. So as soon as we start seeing this thing enacted, we'll do a podcast on that, and that's when you just buy gold, silver, and Bitcoin, and sure, whatever alt is going to be the flavor of the month, and we're all going to make a lot of money. Look, in 2010, gold and silver took off, and I think for a couple months there, I know personally, we moved up 7x in our portfolio just trading gold and silver option contracts calls, and we've seen twice now where we had what I would say major public moves in Bitcoin. I'm not talking about the big moves that happened before it became, retail visible. I consider, the moves in, 2020 and 2017 as the retail visible moves.
Right.
And we're going to see that again going into 2023 with this twist, ironically, as we're coming up on a halving. So it's going to be one of those things where it's going to be like happy days are here again in those sectors of the market. And the whole goal is just to outrun inflation. And so, I don't care if my cost of living is going up 10% if I'm making 12% real. So, and that's how you guys have to think about it. You're not going to go back to the old days here. You just have to beat the nominal change in your cost of living by buying assets that are going to perform even better than that, net after tax, net after inflation. And they're going to be there. It's going to be scary good when that happens in that sense. From a country standpoint, it's financial repression for 10 years. From a trader's perspective, hey, as long as you can outrun the bear, you're good.
Yeah, another nugget today of another piece of macro that's changing from a very long-standing tradition, right, with the Fed and politics and how that affects our bottom line. So thanks again, Bob, for another riveting subject, and an opportunity for us at the end of the day to ensure our financial security by navigating it properly. So thanks for sharing that with us. Guys, thank you for being with us. As always, please hit that like and subscribe button. That really helps us out. And then tomorrow we'll get into a little bit of what's going on with the market and how our push to the midterms are doing. So look forward to that. All right, Bob, thanks again.
Thanks, Phil. Thanks for having me.
All right, we'll see you tomorrow, guys. Bye-bye.
Trade Genius.